The adoption of ESG into everyday business in recent years has seen businesses having to get to grips with a host of new regulatory and reporting requirements. One aspect of that is sustainable finance, which seeks to drive sustainable growth by integrating ESG considerations into investment decision making. Policy initiatives like the UK's Green Finance Strategy seek to eliminate or reduce greenwashing while facilitating the transition of more sustainable economic activities. A particularly hot topic at the moment is the UK and the FCA's Sustainable Disclosure Requirements, or SDR, regime, which came into force in 2024. I'm joined today by Brandon, and we're going to be speaking about that and other aspects of sustainable finance. But before we get into the detail of SDR, Brandon, why is sustainable finance important? Why are we talking about it today?
Well, Tom, as you've highlighted, sustainable finance has really started to have an impact on businesses and investment decisions. There is a real focus on ensuring long-term economic stability and growth, but achieving that in a sustainable way. Now, as you know, in this latest video series, we're covering 6 areas of ESG that we feel are priorities for businesses, and sustainable finance is definitely one that has the potential to really impact on how firms make investment decisions, but also how businesses raise capital to support their growth.
That makes a lot of sense, and it's worth mentioning that there are some particularly key regulations and standards in this area. And that's not just limited to the UK. At the level of the EU, you have the EU taxonomy, which seeks to define and standardise what is meant by environmentally sustainable activity. And you also have the EU Sustainable Finance Disclosure Regulation, or SFDR, which seeks to standardise disclosures in relation to sustainability aspects and features and risks of EU investment funds. But turning back to the UK, what is the current state of play in relation to SDR?
SDR aims to increase the standards of sustainability claims that financial services firms make. And part of that is focused around improving disclosures of how investment funds that are marketed at retail customers incorporate ESG factors into their decision making. SDR has 3 main components. The first is the anti-greenwashing rule, and that applies to all FCA authorised firms that seek to make sustainability related claims about their financial products and services. Now, those claims need to be fair, clear and not misleading, and they need to be consistent with the sustainability characteristics of those products and services. The second component is the sustainability labels, and those apply specifically in relation to investment funds. Now, there are 4 labels: the Focus, Impact, Improvers and Mixed Goals labels, and each of those seek to reflect a different objective of the fund. Those labels have been available to adopt since July 2024, and we're now starting to see firms adopt those labels in relation to their ESG funds. And then the final component is the introduction of the naming and marketing rules. And those are for funds that want to market the sustainability characteristics of the funds, but that do not wish to seek to adopt a label. And those have applied from the 2nd of December 2024.
And just looking at things more from a practical perspective, what are the main legal issues and risks to be aware of in the context of sustainable finance?
Yeah, so there are definitely obvious ones to be aware of, such as the risk of greenwashing, where investment funds are falsely marketed as sustainable. That's something that SDR has sought to address in the retail funds market, but could be broadened out to other firms in the future. It's also important to consider potential regulatory changes, as well as the need for accurate sustainability reporting to avoid potential legal liabilities.
And in terms of the longer-term investment implications of sustainable finance, could you perhaps say a word or two on that?
Yeah, I think sustainable finance really can have an impact around reducing risks, improving operational efficiencies, and enhancing brand reputation. And generally speaking, businesses that are prioritising sustainable practices are often seeing increased investor confidence. That said, there are still a number of challenges that firms face when trying to access sustainable finance.
Yes, and one key challenge, of course, is navigating what is a pretty complex legal and regulatory environment. Thanks, Brandon. So, As with other aspects of ESG, sustainable finance presents complex challenges, but also potential opportunities, particularly to help support longer-term growth. Now, whether you're an investor, a financial services firm, or indeed a business seeking investment, it's really important that you obtain the right advice that helps you to move forward and comply with this evolving legal and regulatory landscape. If you've got questions about anything you've heard today, then please do get in touch.